and welcome to tradingfloor.com's Asia Focus. With the fiscal year having come to an end in Japan, investors are keen to know how companies have done. This last month has been a particular challenge, however, because of the earthquake. Normally the companies are busy closing their books, booking new orders and finalising payments for business already done. However, now they've just been busy trying to get things back to normal following the earthquake, power outages, etc. With us today to discuss this difficult situation for the companies is Andrew Robinson, our correspondent for Saxo Capital Markets. Welcome, Andrew.
Hi there.
This month has been quite a challenge for the companies, and normally orders which would have been almost a sure thing and have come to fruition haven't because of the disaster. So what kind of an effect are we expected to see?
I think it's only natural that after the earthquake, the knee-jerk reaction was certainly to not expect so much from the Japanese companies. Obviously, the timing in the last month of the first quarter was particularly uneventful. I think the problem is that before the earthquake, Japanese equities, the Nikkei, was performing quite well. We were up around about 2.3% year to date. Now, after the very hefty sell-off immediately after the earthquake, we've had a bit of a rebound, but we're still now underwater to the tune of about 4.6% year to date. So it's only natural that the expectations for Japanese corporate earnings and the performance has been scaled back a bit. I think what we're waiting for is for the rebuilding to get underway, and then we can expect to see a better performance. I think there's a lot of money waiting to get into Japanese equities, but at the moment, because of the situation on the ground in Japan with the nuclear reactor issue, I think it's very much a wait and see, wait until that's sorted out, and then the money can flow into Japan.
And on Friday, we've got the Bank of Japan publishing its Tankan Survey, and it is a survey of about 10,000 businesses. It's expected to show the level of confidence that they have and their expectations, plus give an overall temperature check of the Japanese economy. What are we expected to see in light of the disaster?
It's an interesting one that the latest surveys are suggesting that the current conditions are still expected to show a mild improvement from the fourth quarter of last year. Most of the surveys were done in the second half of March, so the earthquake and the tsunami are already, shall we say, discounted in the figures, and yet the current conditions is either unchanged or slightly positive. And I think looking ahead, the outlook section of the Tankan survey is looking a lot more positive. I think people are, as I said, looking forward to the rebuilding program, and then how corporates will proceed, how things will improve, shall we say. And in those particular areas, we're looking at quite a dramatic improvement for the next 3 months, shall we say. If we look at the large manufacturers' outlook, we're going from -2 to +2, and from the non-manufacturing from -1 to parity. So it's still looking quite positive on the outlook. But as I said earlier, I think the main issue is to get everything sorted out with this nuclear reactor. Whilst that's happening, I don't think things are going to happen too quickly.
The Bank of Japan normally uses this, the results of this survey to direct monetary policy. So based on that and what you're saying now, can we expect any reliable conclusions to be made or some real direction to be set from this?
I don't think the Bank of Japan has any room to move on interest rates. We're already at very low levels, have been for a number of years now, 0.1%. And so from a monetary policy perspective, I don't think we'll see any change. Obviously, the quantitative easing possibilities have to be acknowledged, and that eventually that this rebuilding has to be funded. And so I think that's going to be the more crucial time.
Okay. And if we look at the yen, what is the general impression based on expectations of repatriation, and if we look back to the coordinated intervention by the G7 central banks, how is the yen doing?
I think the knee-jerk reaction immediately following the earthquake was to sell the yen, and we were up at 83.30 levels. After that, the main focus of the markets was how much Japanese companies or insurers would have to repatriate yen in order to pay off the claims, etc., etc. And that's when we saw an absolute collapse of dollar yen down to 76.25. Since then, a bit more deeper analysis has shown that maybe that is not as necessary, and so I think the intervention by the central banks, by the G7 authorities, was correct to halt an absolutely tumbling market, and seems to have put quite a strong base under dollar yen. This morning we were back at 83.20, 25 levels at the Tokyo FIX. We've eased back below 83 again since then, but I think generally we're looking at dollar yen hanging around between 80 and 83, I would say.
Okay. Thanks for this insight, Andrew. And don't forget you can follow more of what he's writing about Asian markets on tradingfloor.com.